I want to bring in Nicholas Wealth Management, their CEO, President rather, David Nicholas. David, thanks for joining.
Great to be here, Charles.
Let's just talk about the market in general. So the last couple of weeks, we saw amazing market resolve. You could see where there was pent-up buying demand because we made one heck of a rally. Technically, the Dow came out of bear market territory, one of the shortest bear markets in history. I think it was 11 days. But it was led by things like cruise ships, casino stocks, oil stocks, names that were the most broken. So it felt more like bottom fishers and traders were there. Who do we need and what kind of leadership would we need to see before we felt like, okay, this rally, the next rally attempt is the one investors watching this show want to participate in?
Yeah, Charles, I think you're right, because I think we did see a lot of bottom feeding, and we saw a lot of names that shot up in value that are names that I think investors still need to be cautious on. And I think for Wall Street, there's just so much unknown about what the post-crisis environment looks like. But I think we got to look at the stable, the companies that have consistent, steady earnings growth, consistent, steady cash flow names. I mean, if you look at a company like Google, when you look at a company that has strong leadership, good balance sheets, good cash flow plays, and when we see those companies start to take off, that gives me some more certainty that this market is possibly seeing some type of certainty at a bottom. But we're just not there yet, and I think we're going to continue to see volatility in the coming weeks.
So we're not there yet. Does that mean you're in the camp that we've got to retest and hold the lows, that we've got to form this double bottom, so to speak?
Charles, I just don't know how we don't retest the lows. I mean, I'd be shocked if we didn't. And some of it is just because, the earnings story is going to be ugly. And I know Wall Street's forward-looking, but we also have to understand what's the next quarter look like after this. We still don't know that. That's where the question mark is. So I think we all have to be ready that we should retest the bottoms. But we may not stay there for very long. And I think everyone will be looking at that 2,200 number on the S&P, that 2,180 number right in there. So I think it'll be very telling. But I just think as an investor, the unknowns right now are too great. Wall Street doesn't know how to price that. And so this is why we're trying to figure out, are we going to go back to normal? Is in 2 months from now, if we hit back to market levels that we were a month ago, does that mean that the world that we know it is back to normal? I don't know we can say that. And so I don't know what the changes for the but also for the global economy. What does that look like? What do supply chains look like? What does travel look like 2 months out? What does retail sales look like? The market doesn't know that. So to try to put a price on this at this point is, I think, premature. So we're taking more of a cautious approach. We've been raising cash over the last few weeks because I feel very strongly, I've got conviction in this, that there'll be a better buying opportunity around the corner for some really good long-term valuations.
So the market is supposed to be a 6-month discount mechanism. In other words, you buy now for what may happen 6 months from now. Is it too early to assume that we will get a handle on a coronavirus situation, that the new cases will plateau, that we'll bend the curve or the trend will start to flatten a little bit, that we'll get some good news on vaccines? And, because I get it, we don't know what the E is in PE, but I always tell folks now, the E should, instead of standing for earnings, David, should maybe stand for existence. Price to existence. Will Google be in business 6 months from now, a year from now, and 6 years from now? And if so, is it possible that it's oversold here?
Yeah, well, Charles, where's our case study? And if you can tell me a country that has a case study, China is the one case study that we have that's giving us some numbers. I don't think any of us can put any weight in the numbers that are coming out of China. So I think it's really just an unknown. A company like Google, I have absolute confidence in that a company like Google is not going to be affected in what we're dealing with right now. But really, what does it mean for most U.S. businesses and employers? We just don't know that yet. And so I just think there's really nothing to compare to what this other side is going to look like. In a perfect scenario, these are great valuations. In an unknown scenario, we could be overpaying for stocks right now. I know that's not comforting to hear, but that's the reality that we're dealing with at this point. And so this is where I say you got to cautiously move into this market. You don't want to be all in or all out. You get in stages, and I think that's the best route forward.
All right, David, we talk about life changing in so many ways on Main Street, how we're going to socialize. And you got to wonder if some things should change also in the street. Maybe passive investing, the ability to short without an uptick, and some of the other actions out there. It feels like maybe there should also be some changes that make these downside swoons so much more dramatic than they have to be.
I agree, Charles. I actually could not agree more, and I think that's something that politicians are going to have to really sit down with, leaders in the business like yourself and talk through some of these issues.
David, you ponder that for the next time we talk, because my time is up, David. I got to hand it over to my good friend Liz Clayman.